You can come get him. Okay. Announcements. Maybe. Here we go. Just a heads up. I do want everyone attending the Business Career Fair, which is going to be next week on Wednesday. It's an open house format. It's from 1 to 4 in the Union, the Grand Ballroom. You don't have to be there for 3 hours. If you're starting to look for internships and jobs, that means if you want an internship this summer or a job sometime in the next year, you should be talking to companies about that at the Fall Career Fair. So the Fall Career Fair is when you're going to secure the interview that's going to get you that summer internship. So it's never too soon to start. In fact, most accounting internships are decided in the fall for that next summer. So if you guys being in 202, like if you're on the accounting track, you would be having your intermediate classes in the spring, or some of them, you might already be in some now. You would be eligible to start doing internships this summer. So it's time to get in the practice of doing that. So next week, 1 to 4, we'll have companies there to talk to you about various positions. Come prepared, come with your resume. At a minimum, dress business casual. Business casual, okay? Or something along that line. It could even be jeans if they look decent, preferably not ripped. And is that still a style, the ripped poly jeans? Yeah, okay. Try to make them look a little bit nicer if you're going to wear jeans. If you are looking for a job or internship, don't wear that. Put on a skirt, a pair of pants, that's something other than jeans or yoga pants. Okay. For those of you not in that, I'm looking for an internship job, we do have a career spotlight section. Right now, I've got 8 different professionals. I'm hoping to get at least 10 in different various business capacities, banking, real estate, appraising. I've got a purchaser, marketing person. So I've got different business people from different local companies that are going to be there, that you can just go around and chat with them about what they do and about their profession. See if you have any interest in that, or I don't know, have a discussion, network. So that will be at the same place in the Grand Ballroom. So if you're not ready for internship jobs yet, you can at least talk to those people at the Career Spotlight. So I want everyone to attend. You can do a write-up and use this for one of your career builder assignments. That's in the syllabus. You can check that out for more details. Are we good? Oh, questions, scratching heads. But if you're doing if you're looking for internship jobs, make sure you have your resume with you. Career services at WIU can help with that if you haven't started that already. And we'll have a presentation next Monday at 5 o'clock in this room. Career services will get you set up and handshake if you're not already. They offer services like mock interviews, help with mock interviews, helping with resumes, things like that. Never hurts to have multiple pairs of eyes on your resume, because it may look good to you, but you've seen it so many times, you might kind of block out something that maybe doesn't quite make sense, or maybe a little bit of an error or something like that. Different opinions are always good. So that's what's going on. I do want to, oh dear. Revisit just briefly, because we scurried out of here last week. The financial statements, the contribution approach income statement, here we go. There it is. It was in your homework. Okay. So income statement, flashback to 201 again, it's revenues. So how the company's making money. Are you selling products? Are you providing services? So for revenue, you're generally going to see sales revenue or service revenue. In this course, we'll do a lot with sales revenue because we deal a lot with manufacturers. So they're selling a product. So you're going to see sales revenue. So if I'm giving my income statement to someone outside my company, I would use this style of income statement that we did back in 201. Sales, that's your revenue, then minus your expenses. If I'm a manufacturer or someone who's selling products, right below sales, you're going to have the expense cost of goods sold. So what do those items cost me to either make or to buy them? And if you subtract that, sales minus cost of goods sold, you get gross margin or gross profit. And then you subtract all your other expenses. So selling and administrative expenses, all of those get subtracted to get to net operating income. In this course, we are going to be using this style of income statement, a contribution approach income statement, or they're saying a contribution format. We still show our revenues, we still show all of our expenses, we're still subtracting them to get to the same net operating income. We're just showing it a little bit different. We start with sales, then we just subtract the expenses that are variable. Cost of goods sold, we'll consider that a variable cost. If we have variable selling, variable administrative, we're going to subtract those variable costs first. And we come up with a number called contribution margin. That's sales minus your variable expenses equals contribution margin. We're going to use that a lot in different calculations moving forward. Then once you have your contribution margin, you subtract all your fixed expenses. So fixed selling costs, fixed administrative, subtract those, and you still get the same net operating income. But just put this in your back of your mind. We're going to be working with it over and over again. So they introduce it in chapter 1, but it's something that we're going to keep using throughout. Homework questions on chapter 1. I know we kind of hurried there at the end, and then you had your homework assignment. I had tried to put out in the announcements things that I thought there could be issues with. So if you're not looking at that, actually, I think I took it down. But let's see, what did I say? Okay, so helpful hints with chapter 1 homework. I've already taken it down, but hopefully you took a look at that. If you had questions, I would recommend that you do the Pulse app and get notifications of announcements and due dates and things like that, or have it emailed to you. That is helpful. But is there anything on the homework that we want to take a look at? Don't forget, obviously, like this problem here that you had in your homework, check my work, takes you all the way on that one. So make sure you're utilizing that. We did a similar exercise to this in class. We did exercise 1-4, and in your homework, you had exercise 1-11. And I think this is the one that I gave some tips about on how to come up with those numbers. You can, after the homework gets submitted or after the due date has passed, go back in and see the answers. So definitely take a look at that if you haven't already. And then if you have questions, you know, it shows the solutions down below. If you have questions, come see me. And then the last thing was the different style of income statements, which we did right at the very end. Any questions you have in class for me? Are we awake? Okay. But definitely go back, take a look at it. If you've got questions, get those cleared up before moving forward. So we will come back to this. I don't want you to totally, remove it from your brain. We're going to keep using this. Okay, we're going to start chapter 2 today. Maybe. Let's see. And I gave you a handout. So clearly we need to do something with that handout, right? So we learned a lot of things in chapter 1, and then we're going to start putting those into practice in the chapters to come. So chapter 2, we're going to start looking at what's called a job order costing system. So we're going to be looking at manufacturers a lot, and in this case, and in this chapter, definitely looking at manufacturers, and this is how they track their product cost. So someone using a job order costing system, they're saying our product costs, we can track them by job that we're doing. So a lot of companies are going to use this approach. So these are situations when companies would use a job order costing system. Why is it important to know what your products cost you to make? Does it matter? To know if you're gonna make income? Yep. Why do you need to know how much it costs you to make your product? Yeah.
So I know how much you can sell it for.
Might help you determine what your selling price is. You could also look at some of those costs, see if there's ways to reduce that cost structure. It's hard to be in business if you don't know what your costs are, okay? Things get out of control real easily that way. So job order costing system, let's look at what it is, okay? Oh, these are some companies that use a job order costing system. Basically, you have an example of a job order costing sheet ticket in front of you, okay? It's saying for every job that we do, we are going to track what our product costs are, okay? Oops. Okay, so if we have a job for a client, customer, okay, so they use example of Boeing. Let's say Boeing has an order for, like, what's the problematic plane? A 700 something. 757, just making up numbers. We have an order for 10 airplanes for Southwest Airlines, a Boeing 757. Okay, so that's one job. And we know these 10 planes are being made for Southwest. We want to track the costs that we have going into that job. So how much materials go into the airplane that we're making, how much labor. We're also going to charge manufacturing overhead costs. So those cost classifications that we did in chapter 1, again, don't go away. So materials going into the plane, steel, wiring, I don't know, electronic components. Another handout, apparently they are all gone. So no, but you can just jot it down. Sorry, and I can put it out on Western Online if you want to print it out later. We must be out. Direct labor, how much labor goes into making the various airplanes? And this is a very simplified version. We have various departments, various areas that are working on the plane. I don't know how long it takes to make a plane, but it's probably a pretty substantial process. So we're going to be tracking these planes all throughout the process and reporting these costs. You know, most of you have a piece of paper in front of you with this on it. Obviously, this would be electronic. I would say for most companies that they would be tracking their jobs electronically, all the costs going into them. And then, you know, at the end, we're gonna total it up, see how much it costs, figure out our product costs, okay? So that is a job order costing system. So we're just tracking all of our product costs by job. And if you think of someone like a contractor who's building a house for a particular client. So we've been contracted to make this house. So obviously we want to track for that person's house, the materials going into it, the people that we have working on the house, and then what our overhead costs are. So we're going to lay that out by job. So we don't want to charge one client for another client's materials or for the labor. So we want to track by job. Okay. Feel like there's nothing new there. All right, we're gonna go through this example. Right now, we're just gonna say, instead of on your handout, you've got multiple departments, but in this case, we're just gonna make it all in one area or one facility, so we don't have multiple departments. So our example is we're making wooden cargo crates. It's a very exciting example. So things that you're gonna see on the job cost sheet. You need to identify what the job is with a name, a number, somehow to identify it. Oh, I guess this is a job cost sheet for one particular department. It's department B3. That's apparently where we're making the crates, okay? And then you see we've got categories for how much materials go into it, labor and overhead. All right, so what happens? We get an order from a client. They want, I don't know how many cargo crates, but we need the materials to get started on the job. So you're either going to go out, pull the materials from inventory that you already have, or you have to go out and buy it. So you have to requisition the materials. So you're gonna have to basically pull in the materials that you need. So they need some 2x4s, they need 1x6s, 12 2x4s, 20 1x6s. We're gonna know what the cost of those are because we've either purchased them right now or we've purchased them in the past and are pulling it from our inventory. And we're going to take those out, put them in on this job, put them into production. So our material cost is 116. So if you want to use up some space on your job cost sheet, we can fill that in. So direct materials. I just left you boxes really for the numbers. But let me pull our thing up over here. So direct materials, my handout's a little bit different than what they're showing. This is department B3, direct materials. I'll try to squeak in the little form number that they had. So this was the requisition form and our direct material cost was $116, okay? And if these crates had to go through multiple departments, we've got space for that. Okay, so we've got our materials and they did a little summary down at the bottom, which I didn't give you guys that on your sheets. All right, we've got people making the crates. Our employees fill out timesheets, and on those timesheets, they have to indicate what job they're working on and for what amount of time. Even if you go into service industries, accounting, lawyers, you're charging probably at least by quarter of an hour what client you're working on. Okay, that doesn't mean every quarter of an hour. It's actually every 6 minutes, every 10 minutes. That doesn't mean you stop and like, oh, I'm working on this client. Most of the time you may be working like an entire day on one job or one client's, tax return or something like that. So on your timesheet for that day, if you were working on this job, you clock in, you clock out, you indicate what job you're working on. But if you transition during the day to start working on another job, you would want to make note of that. So our employee, Mr. I am skilled, worked 8 hours, making $15 an hour. and the entire day was working on job A 143. So we could end up having, you know, 1 employee working on that job or 10 employees. But apparently in this example, we just had 1 employee working 1 day. And so that was the labor cost for this job. But if we had multiple ones, we would be pulling that all together onto the job cost sheet. So direct labor, it was ticket number 36. That's supposed to be a 3 and a 6 mushed together. And it was a total of $120. So 8 hours times $15 an hour, total labor cost was $120. But you can see if we had multiple people working on it, we would be tracking all that and putting it on that job cost sheet. So this is just a very simple version. Okay, overhead. What are things that make up manufacturing overhead again? I forget. That was last week. What goes into manufacturing overhead? Give me some examples. It's part of the cost of making our product. Yeah. Okay, utilities at the factory could be part of would be part of manufacturing overhead. Indirect labor, so if we have like a supervisor at the factory, a janitor at the factory, what else? Rent on the factory, what else? Indirect materials, so those are materials that go into the product, but it's smaller or more difficult to track. Those are good examples. Insurance at the factory. So basically all your factory costs that aren't direct materials or direct labor. So somehow we have to charge our jobs for those costs because we need that factory to produce, in this case, the wooden cargo crates. So I'm going to kind of skim over the calculation right now, but we have to come up with a rate of what we're going to charge our jobs. Okay. And that's going to be known as the predetermined overhead rate. I don't want to write it on there. So we're going to come up with a rate that we're going to charge our jobs for overhead. It's called a predetermined overhead rate. I'll show you that slide in a couple of minutes. And then we're going to take that rate and we're basing that rate off of some sort of activity. Most companies are either going to use direct labor hours as their activity or maybe machine hours. So they're going to say, okay, this rate that we came up with, and I'm going to cheat and look ahead what the rate was on this one. Hopefully I'm not blocking it. Okay, so the rate on this one that we're going to use is $4 per direct labor hour. Okay, we'll come back to the calculation. So we're going to use the rate of $4 per direct labor hour. So what we're saying is we think the amount of time that we spend making the crates should mean that that client should be paying more in our overhead costs. So the time that we spend working on it in the factory, that makes sense. You know, they're using up more utilities, more insurance for the factory, you know, more the janitor salary at the factory because more time is being spent on that. So a lot of companies will use direct labor hours as the cost driver. So you want to take whatever rate you come up with and multiply it by whatever you assign to be the cost driver. And in this case, this company is saying, we think direct labor hours are the cost driver. So if I'm spending more time on a job, it makes more sense that they should get more of the overhead costs. That seems logical, right? So we calculate a rate, multiply it by the cost driver, and then that's how much we're going to charge our jobs in overhead. So for our wooden cargo crates, I got to go back a second. For our wooden cargo crates, I'm telling you right now that the predetermined overhead rate is 4. So we're going to charge jobs $4 in manufacturing overhead costs for every hour that we work on their job. So once you have the rate, the predetermined overhead rate, you have to multiply it by however many hours you spent working on this job. So going back to that timesheet, we had one employee working 8 hours on the job. So we will take the, oops. We're gonna take the predetermined overhead rate multiplied by the direct labor hours that we had on this job, okay? And that's how much we're gonna charge in overhead. So if we worked 8 hours on the job and we've got a rate of $4 an hour, 8 times 4, that's how much overhead you're going to put on your job cost sheet. Okay, so we had 8 hours. And our predetermined overhead rate was 4. So if you do that math, 8 times 4, we're gonna charge that job $32 of overhead costs. We'll come back to the calculations. And this is a job cost sheet. So wooden cargo crates done, we've made them. These are all of our costs. Last things that we need to do is just total everything up. Okay, they did a little summary down at the bottom, which you don't really have on your sheet, but now we're just gonna add it up. Add up the direct materials, add up the direct labor, add up the overhead, and fill that in on your job cost sheet. Whoop. So you've got a space down here. So total job cost, add up direct materials, direct labor, and your manufacturing overhead, and that's gonna go over here. Everyone got it? Woo. Okay, so hopefully you came up with the 268. Okay. So our total job cost is $268. Last thing they've got on the job cost sheet is what's the unit product cost. So we do a lot of things per unit throughout the course. And I don't think they gave us this information at the very beginning, but if you look on your job cost sheet, it's saying this job was for 2 wooden cargo crates. So on this job, we made 2 crates. I'm just gonna make note of this, 2 crates. So if the job in total cost us $268, what's the cost per crate? So total job cost $268, divided by the number of crates, divided by the number of units, what's your per unit job cost? So to get it per unit, divide by 2, what is that, 134? Doing math in my head. Okay, so unit product cost then 134. So now we have an idea, at least on this job, this is how much it costs us to make each crate, $134. So hopefully we're selling it for a lot more than that. Okay, so that's a job cost sheet. Yay. We've done one. Okay, let's do, not that, I don't even know what that is. We're gonna do exercise 2-3. So we're gonna do exercise 2-3. Okay, so the instructions that are on the next page, it's basically saying, do the job cost sheet for this job. Job A 500, and then also on your job cost sheet, figure out what the unit product cost is. So you're just gonna list out how much materials, how much labor, how much overhead, what's the total job cost, and then figure it out per whatever we're making. I don't know what we're making, but per unit, how about that? And their overhead is based off of direct labor hours. They didn't tell you how many hours they were working, but you should be able to figure it out, right? If they gave you the labor clause, they told you how much they were paying per hour, so you should be able to figure out the hours. And the unit information must be on the next page. So the unit information, they are saying that this job had, no, that's not the next page. Let me find the next page. This job has 40 units. How about that? I know because I have the solution. They had 40 units in this job, so they want to know what's the unit product cost. Yep. If job A 500 consists of 40 units, what's the unit product cost? So throw that in there also. Sorry. Yep. How's it going? Overhead. So they decided that the overhead rate is, so we pick the overhead $14 an hour. Then you multiply by how many hours they work. It's good, it's good. Good. Oh, yes, okay. No, I was like, what are those? Okay, so that means they work 9 hours on the job, trying to get the effective overhead there. It's $14 an hour. Okay, so the number. To get how many hours paid for, if there's something one go for free, or if there's importance. Oh, no, wait, what did they say? That's fine, it's gonna take 7.
Yeah.
So take the 1. That's how would they were.
Thank you.
Uh-huh. Alrighty. Okay, so all you need to do is fill out on your job cost sheet, how much material you have on the job, how much labor, how much overhead. I mean, so they're giving you the first 2, so that's easy peasy, direct materials 231, direct labor 153. Then your manufacturing overhead, you need to take the rate that they give you, which was, they told you the rate was $14 an hour. Direct labor hours, what they're using for their cost driver. So then you just need to take the 14 times how many hours were worked on that job. They didn't tell you how many hours were worked on the job, but they did tell you. Move this sucker. Okay, they did tell you the labor cost was 153. They said they were paying their workers $17 an hour. So we can figure out how many hours we were paying for. So take the 153 divided by the 17, we paid our workers for 9 hours. So the amount of hours being worked on the job is 9 hours. Our predetermined overhead rate is 14. So 14 times 9, we're gonna charge this job $126 for overhead costs, things like insurance, rent, taxes for the factory. So that's how much this job is gonna be charged for those things. Total it up. So our total manufacturing cost for this job, $510. Everyone okay? And then unit product cost, on the next page, they'd said there were 40 units in this job. So take the manufacturing cost of 510 divided by the number of units, our unit product cost is $12.75. Okay? Easy enough? Questions about it? All right. We're gonna go back and look at the calculations for the manufacturing overhead, that predetermined overhead rate, because we kind of just breezed over that. So let's do that. Still many slides on this. Okay. Yeah. Here is a very long-winded formula right here. All right, this is how you calculate a predetermined overhead rate. Numerator is the estimated total manufacturing overhead costs probably for the next year. So it is an estimated number. So when we start the year off, we are going to have jobs that are going to be running and going, and we need to charge them something. But we don't know exactly what our costs are going to be. That's why we're using an estimate. Because we don't have the actual information yet. So this is where managerial is saying, hey, sometimes we use estimates. We don't have actual numbers yet. Okay, but we have to charge our job something. Otherwise, you know, our costs aren't going to be appropriate. We won't be charging enough for things. Anyway, so you've got estimated manufacturing overhead costs. So rent at the factory, insurance at the factory, supervisor salary at the factory, estimated for the next year or whatever your time period is, that's the numerator. Divide it by whatever you're going to use for your allocation base that you're estimating is going to be happening that next year. So if we're going to charge our jobs based off of direct labor hours, then you need to estimate how many direct labor hours do you think your employees are going to be working for you next year to make the products. Okay. If you're basing it off of machine hours, like how much time does the job spend on the machines? Then you want to use estimated machine hours for the upcoming year to use in calculating your rates. Okay, so companies can do different things. Companies may even have different rates for different areas of their production process. Okay, so estimated manufacturing overhead divided by an estimated allocation base. That's how you get the rate. So for our pair company, this is what they estimated. They estimated their total manufacturing overhead to be 640,000. And they broke their overhead costs, manufacturing overhead cost out into a fixed piece and a variable piece, and they added those two together. So we'll look at an example of that. They said our fixed manufacturing overhead costs were 200,000. We think our variable costs are gonna be 275 times the direct labor hours. So they have fixed and variable, they added together for their estimate. And they estimated 160,000 for their direct labor hours. So if you do the math on that, that's where they got this $4 an hour. So if we work on a job 1 hour, we're gonna charge it $4 of overhead costs. If we work on a job for 2 hours, 2 times 4, we're gonna charge it $8 of overhead costs. If we work on a job 3 hours, 3 times 4, we're gonna charge it $12. Okay. Let's do, we're gonna try exercise 2-2. So 2-2, we're going to do another job cost sheet. But this time, we're also gonna calculate the predetermined overhead rate because I have scribbled out where they showed us what the overhead rate is. They are giving you the information to calculate it. So we're doing the job cost sheet, how much materials, how much labor is on that job. You know, those are the easy ones to fill in, right? Then when you get to manufacturing overhead, you're going to need to calculate the predetermined overhead rate, multiply it by, what are they using? The direct labor hours on that job. So you're gonna have to calculate this and then multiply it by that. Everyone got the formula down for overhead? I'd write it on the board, but the board looks terrible. This would be the calculation for the predetermined overhead rate, estimated manufacturing overhead, divided by, in this case, estimated direct labor hours. Oh, we can't do. Sorry, this one doesn't give us, oh, I thought it was a whole thing. My bad. Okay, we don't have these. They don't tell us that, right? In this example, sorry, we're just skipping right to this line. Shoot, I thought this was did it all in one. Well, put. Okay, so they want to know this number right here, what they would have done for the year. How much overhead would they have charged their jobs? So. Two-step process. First thing you need to do is come up with your predetermined overhead rate. That's totally based off of estimates. So when you see those estimated numbers, that goes into calculating the rates. And then when you would be doing that job cost sheet and charging those jobs, you want to take the rate that you calculated over here, and then you have to multiply it by what actually happened. So what the actual direct labor hours were. So be careful between your estimated and your actual. They don't have this one. Yes. I'm like. I'm like, it's pretty neat. That's not. I see you said with my. Oh. Yeah, yeah, yeah. Perfect. Yep, you got it. Okay, so I guess we had a nice complete job cost sheet in our example in the slides. We'll do that next. Anyway, so this example, they're wanting this number. How much manufacturing overhead applied did they have during the year? And that's asking for, on those job cost sheets, how much overhead did we apply or charge to our jobs? So they didn't really give us the materials, the labor, but they wanted us to calculate this number. So two-step process. First, we need this rate. So the predetermined overhead rate, you had to calculate that first. And that's going to be based off the estimated numbers. So, oops, that's actual. Hold on, here we go. So their estimated manufacturing overhead cost, they said, was 257,400, and their estimated direct labor hours for the year was 11,000 hours. So first thing you do is you have to calculate that rate. So this is our predetermined overhead rate. $23.40. That's how much we're gonna charge a job for every hour that we work on it. That's how much we're gonna charge it in overhead. So they want to know, well, how much did you charge? So we need to take this rate that we now know is $23.40 and multiply it by how many actual hours were worked during that time period on your jobs. And they gave you that number. It was 10,800 hours. So all you had to do was multiply that out. And you should have gotten $252,720. So once we have the rate, use that rate and multiply it by the actual level of activity. So the actual direct labor hours worked was 10,800 hours times the rate. And you would have charged your jobs $252,720 in overtime costs. Questions on it? Okay. Let's, I hope, do the full thing, and maybe that's the example in the slides. So let me pop that up. I think it is. Woo. Okay, so they want to know what would be reported as the cost of job WR 53. Hallelujah. They want you to do the whole job cost sheet. So direct materials, direct labor, how much overhead are you gonna charge this job? You have to calculate the rate, multiply it by the activity, all that good stuff. So you get to do the whole thing. Yay. So if you want to use, space on your sheet or just write it out individually, that's up to you. Yeah, okay. Oh, okay. Okay. You want to sit here? Okay, all right, hang on. Okay. Let's go. Yeah, you got the tough stuff. Yeah, that's- How many hours has worked on that job? Oh, okay. Yep. Yep, that's good. Yeah. You should end up with 730 for your total job costs. Yeah. Need help. Yes. Just because I contact didn't mean that I was. Yeah, okay. Just like, we want to do this job, say, for
Okay. And then the last one is, so you have to exactly this rate to multiply it by the hour. So you know the hour. Or spaces, so it has to make our overhead costs. So that's what they're actually supposed to.
Yeah, it looks really nice.
So they estimated overhead costs. So. Yeah. That should be where it is. And
Get
then
the number 38.
divided by.
So I think it's very super down for us, like $20,000, $36. 30, that's
You
great.
got calculations, that's great, I can plug it in. Yes, that works with it. Okay, let me ask you this, what if they told you, they're gonna sell it at a 50% markup? So they're gonna sell it at 50% above cost, what would be the selling price? Through that. What would be the selling price if they're selling it at a 50% markup?
What?
Okay. Checking my screen. Okay. Oh, okay, so I was.
Oh.
Fifty percent is 730, and then you have to add it back. So if it's a 50% markup. That's okay.
You know, talk about your ex-girlfriend. I would.
Okay, so keep it the hard part, that's the overhead, then you can tell that and the chart video. So you skipped over your labor, you had. Yeah. So the job cost, you want to know what you have for that job, so materials, overhead, all that. That's what I got. Okay, so let's look at this. I think we're doing good, but we'll see. Okay, so your job cost sheet. You're filling in what it costs to make the product for this particular job. The job said they had $200 of materials. They said they had 10 hours of labor, paying $15 each or per hour. So that's $150 in labor costs. Overhead, that's where it gets a little trickier. They're basing their overhead on direct labor hours, so you want to multiply it by the actual labor hours, but then you have to come up with this predetermined overhead rate using the formula here. So what do they estimate their overhead costs are gonna be? They said they estimated them in total to be 760,000, divided by whatever they're using for their allocation base, whatever they estimated that to be, they estimated to be 20,000. You're using estimates because you're coming up with this rate at the beginning of the year. You don't know actual numbers yet. So we've got this rate, $38, what we're gonna charge each job for every hour that we work on it, and overhead costs. This job, we work 10 hours on it. So 38 times 10, we're gonna charge this job $380 of our overhead costs, like rent at the factory, insurance at the factory. We're gonna charge them $380. What's your total manufacturing cost? Just add them up, direct materials, direct labor, manufacturing overhead. It's total total job cost of $730. Okay, and then I said, let's use this to determine selling price. If they're saying we're gonna sell it at a 50% markup above cost, what are we gonna sell it for? What did we come up with there? How much? So we need to sell it at 50% above cost. Yeah. So 1,095. So if I'm selling it at 50% above cost, 730 times 50%, that's 365. Add that back to the 730. You know, or you could have just said 730 times 1.5 and gotten the 1,095. So selling price, if they're saying they're selling it at 50% above cost, take half of the cost, add it back to the cost, they're selling it at 50% above cost. So they're gonna sell it at 1,095. Okay, we're like semi-professional now, right? Okay, we're taking one more step. I feel like chapter 2 is just not super long, so we kind of just keep doing this over and over again. But we have to make it more complicated. To go with my handouts. Oh, sorry, were you guys taking pictures of something? What do I need to, my solution? Are we good? Okay. Multiple departments. I don't know where that's at in the slides. So my overhead, oh, here we go. So you'll notice, oh, on the handout that I gave you guys, I have, you know, various departments listed. So, you know, think of those Boeing airplanes. It's probably got to go through, I don't know how many processes. Sometimes things may actually be like moved to another facility even to finish out the product. But anyway, so the production process could be long. There could be lots of different areas where we're doing, you know, adding materials and labor and different overhead costs. So you could be compiling this information from 20 different areas or maybe just one, like with our wooden cargo crate. So we're gonna look at like a multiple area job cost sheet. And walk through that process. And you just keep doing the same thing over and over again. I know it seems like a lot more complicated and they give you a ton of information and it can be a little bit overwhelming, but if you just remember the basic direct materials, how much labor, your calculation for overhead, and you just keep repeating the process for multiple areas. Okay, so we're gonna walk through this example. So take a look at that. I should probably actually take a look at it. And I feel like there must be more information on the next slide. So you might want to take a picture of this or jot it down. Oh, and these are the estimated numbers right here. Okay, so these are the estimated numbers. So we have 2 production departments, a milling and assembly. So we're gonna have 2 different rates. One rate for the milling department, one rate for the assembly. So our predetermined overhead rate for the milling department is gonna be based off of machine hours. Okay, So, we're gonna have predetermined overhead rate for the milling department. And that's based off of machine hours. And then we're gonna have a rate for the assembly department, and that's gonna be based off of labor hours. So assembly, that's where we're putting it all together. So they're basing that on labor hours. Milling department, that's where they're working the product on the machine, so they're saying machine hours drive those costs. Did they say direct labor hours? Yeah, that's based off of direct labor hours, okay? So basically, what we wanna do here is come up with our two predetermined overhead rates, okay? So what's gonna be our rate for the milling department? What's gonna be our rate for the assembly department? So go ahead and do that. We can do one together, or no, I'll let you guys take a look. So these are all their estimated numbers right there. And you wanna take each column separately. Okay, so if we're trying to do milling, just look at the information in the milling department. Okay, so let me walk you through milling and then turn you loose on assembly if you haven't already done both of them. So these are all estimated numbers. So we're saying for the milling department, they're using estimated machine hours for their cost driver. So we just want to use the same formula that we've used before for the rate. Take estimated manufacturing overhead just for the milling department divided by estimated machine hours just for the milling department. Okay, so what do they estimate? Again, just look at milling. What are they estimating for their overhead costs in the milling department? Well, they broke it out between fixed and variable, which I don't think we've seen yet. So they're saying the fixed overhead cost in milling estimated is 390,000. So that's part of your numerator. And then they're saying the variable manufacturing overhead cost that they're estimating is $2 per machine hour. So we have to do the math on that to get how much variable estimated manufacturing overhead cost there would be. So take the $2 per machine hour, multiply it by the estimated machine hours. That's 120,000 in variable manufacturing overhead costs. So we have a fixed estimated overhead and we have a variable manufacturing overhead. So 2 times the estimated machine hours, add those together and divide by your estimated machine hours. So try to do the assembly if you haven't done that one. And it's based off of estimated direct labor hours. Maybe we'll just get to this point today. Okay. Did we get this? What time is it? Oh my gosh. So for the assembly, estimated manufacturing overhead costs, 500,000. That was just the fixed, so you also needed the variable piece. The variable, they're estimating at $3.75 per hour, per direct labor hour. So take the 375 times 80,000, you get 300,000. Divided by the estimated direct labor hours, which was 80,000 direct labor hours. To get a rate of $10 an hour. So overhead rate for milling, $8.50 per machine hour. Overhead rate for assembly is $10 per direct labor hour. Okay, we'll finish with this on Thursday. Okay. Yes. So don't lose this. Bring it back with you. Smart book is due tonight for chapter 2, so don't forget about that.
Favorite, right, so say good work.
Email me and I'll.
All right, thank you so much.
Give me just a second.